Good day to you all. This is Terence Baker, news reporter, Europe, Middle East and Africa at CoStar News Hotels. It's great to have you listening to us again on our monthly podcast, The Upgrade, where we talk all things Europe, Middle East and Africa in the hotel industry. Welcome. Today I'm thrilled to have as my guest David Damiba. He's managing partner and co-CEO at Kasada Capital Management, one of Africa's most notable investors. He will tell us what they are doing and some of his outlook into the continent and investment very shortly. I'm going to jump straight in. So, David, welcome. How are you?
Thank you very much, Terence. I'm very well. Thanks for having me.
We last sat down together in Windhoek, Namibia, a couple of years ago. I remember it very fondly.
Yes.
I never thought I'd ever get to Namibia in my life. I mean, it's next door to where you live in South Africa, of course. You're currently in London. But Namibia was such a thrill for me. It was great, wasn't it? It's a wonderful country.
It's an absolutely stunning country, beautiful one. It's one of those bucket list countries for a lot of people, and getting the chance to visit it is just really a special place, and also great people.
And definitely, I want to get next door to Botswana because my
Yes,
obsession, and most people on this podcast know my obsession for birding and bird watching, and Botswana and Okavango Delta. I mean, it's just a dream destination. So let's get into it, David. Let's talk about Africa and hotel investment. Maybe first of all, you can just tell us a little bit about your journey, how you got into the industry, how you see it at the moment.
yeah, absolutely. So my journey in that led me to kind of hospitality is kind of I would say, fairly unique. It mixes the personal and the professional in some ways. So I've been investing in Africa for now close to 20 years. Actually, I started in 2007, more as a generalist investor. Before that, I was an investor slash trader in the United States for almost 15 years there as well. So when I pivoted to Africa, I looked at Africa across different sectors, and the common denominator across sectors that I looked at was always hospitality. Um, why was it the common denominator, even as a generalist investor? It was simply because of the financing structures and challenges that the sector had. I would be sitting in London, running either an investment fund or another private equity fund, and a lot of people from the continent will come to us to ask for solutions around financing the hotels, funding them, etc. So it's always been kind of something I've been looking at over the past 20 years. And then there's also my personal journey, which is travel is kind of part of my life, and I spend a lot of time on planes and in hotels. I've actually did the math in February, where it's like, okay, in the last 20 years, I've been on about 1,500 flights. So
My goodness.
if you assume 3 night stays and 1,500 flights, so that's 750 round trips. You assume about 3 night stays, you end up coming with a math. You're like, okay, I spent about 6 years in hotels, right, in the past 20. And so, yeah, I'm very specific, and I look at the details when I enter a hotel, whether it's you close the door, you knock this stuff. So it's been both on the personal and professional. It's been kind of something I actually really enjoy and love hotels. I just like them.
No, I
I
mean
like to see how
it's
you can
Spain in so many hotels is got to be the best way of getting to know the industry. And as an
exactly,
investor, you're probably agnostic to brand, like independence
exactly.
as well. It's perfect. I mean, I often wonder if some of the CEOs for the large companies probably asked to stay in a competitor's hotels because otherwise you're in a bubble, aren't you? But
Yes, exactly.
you you've probably stayed in some wonderful properties. I mean, let's talk about Africa, David. I mean, every time I go to a conference and Africa's spoken about, probably unfairly, they talk about a lack of sophistication or a growing sophistication, which is not quite there maybe on international levels, etc., etc. They're always talking about how fragmented it is. Of course it is. It's 54 nations across a massive continent. They're always talking about the problems of opening, getting those agreed contracts to final opening, etc. I mean, what are you seeing in terms of sophistication, both in terms of hotel operations and investment in Africa? Coming out of South Africa, of course, you have Morocco and Egypt, but what do you see growing now in Africa?
Yeah, that's a great question because I can kind of I've seen effectively 20 years of evolution in investments across Africa, across sectors and across the hospitality sector. I think the degree of sophistication is probably there's probably more of a mirage. It's not sophisticated. It's, the investors in hospitality in Africa are usually successful high net worth families in Africa that have been very successful in other industries and now want to acquire hotel or build hotels. So from the get go, you're looking at owners that might be fragmented because there's not that many institutional owners, but that tend to be sophisticated in business. That's point number one. And in terms of the operations, I think these owners also are knowledgeable. They're knowledgeable about their lack of knowledge, right? So they're like, we've been very successful across different industries. We want to do a hotel, and they sign with global operators. Oftentimes, right? There's obviously a lot of independent hotels, but a lot of the larger boxes are starting to be more and more of these international operators. So there is sophistication that's gone into the market that's gotten better. I think financing also has become more sophisticated. So there's ways to go, but I think the concept of it not being sophisticated is probably number one, mixing too many countries together and probably doing it a disservice. And obviously, there's differences in sophistication because the differences in maturity of the markets. Egypt, Morocco, and South Africa in a bucket by themselves. You got countries like Ivory Coast that has a long history of having international operators in as well. So it varies by country, but by and large, there's a bigger movement in terms of sophistication that has come also with the growth of the countries and also the amount of capital that's available has just increased.
What about the sophistication of debt, of lending, of investors? I mean, you're having more international people coming in, but also a rise in intra-African funding across regions, perhaps. Or I mean, tell us something
Yes.
about how you're looking at African investment from Africa.
And from a debt perspective, particularly.
Yes.
Yeah. So that's something where actually personally spend quite a bit of my time on. So my view is that lenders by their very nature tend to be a bit more comfortable the more scale you have, right? So the benefit of scale gives you access to lending. So what we've noticed from our platform that we set up in 2019 and has grown to 20 hotels across 7 different countries and about 3,500 keys is that when you have scale, you can have really interesting conversations, not only with local lenders, meaning the large bank in that specific country, but there's also regional lenders, right? And there's Pan-African lenders. So you have these three layers already. And then above that layer, you also have the development finance institutions like the IFC, Proparco, et cetera, that are also interested in participating in funding that sector due to its impact on tourism, et cetera. So we've actually found that with scale, you do have quite a bit of access to financing. And then the question becomes, and this has been the big story in Africa, is that oftentimes you would have financing, but it would not be fit for purpose, meaning that the financing itself would not be structured in a way that enabled a hotel to operate, meaning there's a ramp up period, there's this, that. So we think that the financing is there now. We've gotten more fit for purpose financing. We think my view is the evolution of financing in Africa is going to go even further, where with scale, you'll start seeing more of what I would call almost non-amortizing bond issuance or bullet loans, where effectively you don't necessarily have to have a lot of debt, but your debt doesn't amortize, right? And you puts less pressure on the hotel operations, enables the equity to receive more dividends. So I think that's going to be the evolution. But the big story, I really do think that banks and financings in general in Africa, it's actually dramatically improved in the last 10, 12 years.
And this is debt that allows hotel timelines to work, because that's one of the big problems, isn't it? That you have good meaning people and people who have the enthusiasm, but for finance doesn't quite follow the trajectory from pre-construction
Exactly.
to opening.
Yeah, we're still not there that it's a perfect world where it's literally like that, where, it's typical to what you see in in Europe or the US. But a larger percentage of the debt available is becoming more of what I call fit for purpose, a larger percentage. And we've been recipient of that. We've done a facility with the IFC coming out of COVID, kind of an umbrella facility that was exactly that, focusing on longer timelines, grace periods to enable time to take place. So that flexibility is happening. So I think it's improving, and the improvement tends to come from either the development finance institutions or the larger banks that are operating on a Pan-African basis, and some of them are actually South African institutions. If you go to a typical local bank, they tend to have a little bit less flexibility, and that's when issues can start.
And I follow some of the news from, is it the African Development Bank? It's probably more to do with lending and debt on infrastructure. But then, of course, that's critically important for hotels. You follow the flights, you follow the infrastructure developments, do you not?
Absolutely. So some conversations that we have sometimes, we're like, at the end of the day, right? A hotel is a real asset. It's infrastructure, and it's infrastructure linked to tourism, right? So when we have conversation with for the different ministries of tourism across Africa, we are really aligned in our goals, in the sense that if you're a tourism minister in a country, you want to increase your arrivals. We also want to make sure that you have the right pool of infrastructure for your arrivals to come in, enjoy their time in the country, whether it's for business or for leisure. So partnerships with government around that as a real impact. So the more you drive it, the more that infrastructure drives it. And certain countries are totally aware of it. So whether
Mhm.
it's from the Morocco's of the world, Egypt as an incredible growth as well, and the private sector. Building bridges tends to fall with, oftentimes in public partnership and with private. But in terms of hotels, it's usually oftentimes private capital that does that. And it's really, really, really key driving tourism. And not only tourism, but another enormous impact is job creation. And you have a young population on the continent, and some of the biggest job creation sector is effectively tourism.
Yeah, I mean, you mentioned working and living in the United States. I did for 20 years, and I was working more in meetings and conventions journalism. And one of the big problems there was you'd have these publicly um, mandated, invested, and open convention centres. But when it came to a headquarters hotel next to it, that usually was either private or private public, and it would be on a different timeline. So this is not an African thing. There
Yes,
are always hiccups along a line in any terms of having all the different bits in line with one another to make a successful mixed use project or whatever it might be. To
absolutely.
talk about back to some of you mentioned you were active in 7 countries. Did I hear
Yes.
correctly? Yeah.
Yes, correct.
I
Yeah.
mean, obviously, let's ignore wonderful South Africa, Morocco, and Egypt for a while. The other countries you're in, is it about having scale, clustering? I mean, how do you look at different markets in Africa? I mean, again, I'm going to say 54 nations, dramatically huge continent with different drivers. But what are you looking for in terms of the country where you're going to try to get some scale?
Yeah. So I think scale and clustering are absolutely important, right? It just lowers your marginal cost of operating by even by a percentage or two. It makes a big difference in this business. I think at the end of the day, I think some of the views that we've seen is that you can also work really hard, but you also need to have a little bit of a tailwind, right? You need to have a bit of a tailwind, a macro tailwind in that market, and the tailwind, macro tailwind, you can have a disconnect between macro tailwind as in IGDP growth, but not necessarily a tailwind in that sector, in the hospitality sector, right? So you do need to have a bit of these arrivals increasing, et cetera. So you have countries like Senegal, right? Senegal is actually a fantastic case study, right? Not necessarily the largest economy in that West African bloc, but just a really vibrant and constantly growing hospitality market, because it has a little bit of that angle where the regional countries around it would go visit Senegal on the weekends, or you know, go to the beach. And you have quite a bit of staycation within the main cities in Dakar. So we have a situation where our hotels do well in terms of constant growth, but also we have a bit of a resort outside of Dakar that's kind of a staycation type of resort that gets both the locals and the internationals to come in and take advantage of it. So Senegal really sticks out in terms of one of the most attractive countries there, and because of this constant tailwind. And there we have a few hotels that are close together, and we benefit from the clustering as well. And then you have Ivory Coast, which is an interesting one because it's a beautiful macro story, Ivory Coast. You know, stability, GDP growth that has been pretty good, but more a challenging hospitality market in Abidjan. Quite a bit of suppliers come in, really more business driven. So there you have to be even more obsessed with your margin and your cost control, right? Which is difficult because your top line is not necessarily growing as much, and you need to cluster. So there, it's actually been a bit of a challenge in Abidjan due to that. And then you go to Nigeria next door. So every market is so different. That's the thing about Africa, right? Nigeria is just incredibly resilient, busy, active. So regardless of what you throw at Lagos, it just finds a way to survive. And you literally see that in our hotels as well. We have one hotel in Ikoyi and Lagos. So as you invest across the continent, you start developing these clear views around what makes these cities tick, and also how you need to adjust you cannot run your business exactly the same way, and in different ways in different countries, different capital cities. So being a Pan-African investor is actually it's actually it's a lot of juggling because the solution doesn't apply across the board, right? And in some other countries, you might be totally fine with just one hotel doing okay, and you're working with an operator that has a bunch of other hotels, and it's fine. So it requires a lot of granular touch, and I do think when we can improve across Africa, across the years to come, it more of this controlling the cost and to control one's margin is probably going to be a key aspect of it. And I think the arrival of AI and all that's probably going to help as well.
I mean, let's talk West Africa. Are we talking essentially domestic markets? We're talking about that demand coming internally. Are we looking at perhaps a little bit better occupancy and rate during the week? Weekends are hard to fill. I mean, how do you do that
Yeah,
yield management? I mean, you can mention specific countries if that's easier for you. But I
yeah,
mean,
yeah,
give me some sort of semblance about what the demand drivers are. And
yeah. Demand drivers. If you, for example, take Nigeria, Lagos, our hotel there is mainly local and regional demand. So, local demand being other cities within Nigeria, people going to Lagos for business, extremely active over the week. But then you have specific things where if you do it well, our F&B in our hotel in Nigeria does amazingly well on Sundays because it's had this like really well-known brunch that people go to after church, and it's always booked for multiple rounds on Sundays. So the F&B does very well on weekends, for example. And yes, you're right. Hotels in Africa tend to not be in general tend to be underperforming on weekends. But so the advantage of that local demand, for example, if you have in Nigeria, is just the benefit of it tends to have a lot more resilience, right? It tends to not be headline driven. So that's that. Abidjan, more of an international, depending on the segment, but more of an international. The Air France flights come in, Turkish Airlines, they kind of fill most of these hotels. But when you drop in segment, you go to the economy segment, and Ibis Hotel in Abidjan is mostly going to be filled with regional and local players, right? But a Pullman's going to have a lot more international. And then
yes,
and then Senegal is a bit more of a mix. You have it's actually a beautiful mix there. You have local and does better on the weekend. So they kind of all vary a little bit, but I do feel that the regional and local demand is actually your base business. That's your business that kind of, frankly, that tends to be less volatile because it's less headline driven. People just want to do business. They do their thing. They come in. They don't see, oh, there's Ebola several thousand kilometers away. Well, I'm not going to go there because, which is a typical thing of headlines, right? People are
yes, of course.
canceling their flights to Cape Town because there's Ebola in the DRC. So that
Well, we've
regional
forgotten
people.
about Ebola with the World Cup. That's generally the way it works.
Yes,
But yeah, I mean,
that's true.
just move.
That's very true.
I mean, I was it wasn't even any concern about the Democratic Republic of Congo team, was there? Or
Yeah,
maybe it
yeah,
was
yeah,
initially.
yeah,
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 but then
yeah,
England beat them, so there you go. Um,
yeah.
I mean, you don't need to give me away your secrets, but is there any other market in Africa, either a city or country that's exciting you that you might be entering soon?
No, we've I think we've been fairly open about our ambitions and try to do something in Morocco. I think Morocco
Mhm.
is a fascinating place with a tale of for a couple of different cities where you have Marrakesh, that's effectively now a competitor to European vacation destination, right? That has grown tremendously. There's great opportunities there. International investors are looking more and more at it as well. Um, they'll be part of the hosting nations for the World Cup in 2030 as well, which would be nice. And they're doing pretty well also in this World Cup. So we there you have quite a bit of scale, and we think I think we think it's quite interesting. Um, and then there's markets where this is all my own personal thing, which is there are markets that are not easy to execute, but that really have continue to offer amazing promise. And this is actually one of the largest economies, but Lagos is really special because you have an incredible growth, you have incredible resilience, you have a lot of cash and capital, but the barriers to entry are high. It's very difficult to develop a hotel in Lagos, right? It's very difficult to develop one, and the supply has been constrained. So it's really there. It's really, if you can find that riddle and solve that riddle around cost control in terms of building the hotel or taking a brownfield and repositioning it or putting some renovation, which is what we did. Um, I think Lagos has what I would call a lot of ADR elasticity. You can really push the ceiling quite high. And in other markets, you have a really hard ceiling in terms of ADR. Lagos, you can really push the ceiling with the right product. So
Is there still
I still feel
a myth that ADR is high in terms of equality? Is that a myth?
I, you know what? I'm probably one of the best people to talk about this because I've been traveling in Africa mainly from London, especially for 20 years, and I've seen the evolution. I think it's a myth now. So it was the case 2007 to 2012 probably was the case. And you would land in Luanda, Lagos, or some of these places, you pay $600 a night for not such a great product. And it's true. There's been a sea change in the market, right? In terms of quality, new products, the market has reacted by putting in new products. I don't think it's the case anymore. And that was this kind of dichotomy between petrodollars and growth, and the market had not caught up yet. But now I think it's okay. I think it's that arbitrage is gone, I would say, and I would say the opposite. If you go to places like South Africa, for what you pay for the product, you're like, wow, this is kind of amazing, actually. So I think it's a myth. Yeah, you might have a couple places here that still have that, but I think overall that's gone.
Sure. I mean, 2 points come to my mind. Firstly is that as humans, we're very comfortable having these myths in our basket,
Yes,
and
yes,
just, pushing them out there when it makes us feel more comfortable, we have to make less decisions or whatever it might be.
yeah, yeah.
And secondly, I had an economics teacher when I was at school who said, "Always follow the success of the football teams, be it cities in Britain or countries." Um, you know, I know Nigeria didn't make the World Cup this year. There
Yeah,
might have been
yeah.
some other reason why it didn't, but you see the success of football, and this might be juvenile, and but you
That's
see the
interesting.
success of football, and you see the success that allows that success to come, and then continues that success in the future. There's definitely a correlation between those. I mean,
That's a good point, actually.
our friend Trevor Ward. Um, Puts together the African Hotel Development Pipeline report every year. I mean, he's often said that the percentage of the initial pipeline that comes to fruition is around 40%. Are we seeing that change with sophisticated investors such as yourselves?
Yeah, I think you're going to see that change a little bit more. I think, you know, I, I love the fact sometimes that I come through. I come through this hospitality sector as a generalist investor, as opposed to somebody who's only done hospitality my entire life. So the way I view some of these signings, especially with international hotel operators, I think there's quite a bit of showmanship going on, and people sign these hotels. And what I've seen in Africa is oftentimes they sign these hotels, but very little has actually been done or de-risks, meaning financing hasn't been signed up with maybe the piece of land, even all the authorization has not gone there. So I think that complicates it. I think that one of the biggest drivers is financing. But with platforms like ours and with other platforms that are starting to pop up, either local or regional, you're going to have a severe drop in increase in that realization rate because it's you announce a deal, you do a deal once you kind of have a commitment, and you have the capital structure ready, you have the partners ready, and you have all the other things ready. So I think that's it's more of a function of how it's a little bit of a human bias where they love to announce these hotels without necessarily just having everything signed up and done. So I think that's gonna improve. And you're looking at more sophisticated local investors as well, looking at owning more than one hotels. I think that's also going to be the change. So something was announced in Nigeria, for example, where it's going to be a platform of hotels built. It was a partnership with Accor with a local investor. That type is going to really de-risk it because as you go through one hotel, second hotel, third hotel, the probability of delivering just increases as well. So it's the quote unquote institutionalization of the market, which will naturally drive those numbers up, I think, and we'll see it over. But it's going to take 5, 10 years.
And talking about partners you mentioned, I mean, we're also seeing a rise and growth of sophisticated specialist intra-African, maybe Middle Eastern operational companies, management firms coming into Africa. You got the LFs, you got I think
Correct.
Congo has one or two. That will obviously increase the sophistication on a day-to-day level as well.
I agree. Agree. I think that's going to increase the sophistication, the third party managers building relationship with owners. Uh, and frankly, the large operators, the big brands, are going to start also being a bit more flexible and okay, as they did in the U.S. and now with Europe, with moving to franchise models, right? And this is also going to trigger the rise of these third party operators that on paper tend to have a more in alignment with an owner, and that alignment also is going to do what I call almost a bit of knowledge transfer, right? Working together with the local owner and their teams, and that will build knowledge transfer and expertise over time as well. And I think that's a positive.
I mean, we mentioned the Congo, also Ethiopia. These are two countries in Africa that, well, Ethiopia was a darling, wasn't it, for a little while? I mean, I know
Yes,
they had
yes,
some internal problems, but Congo, DRC, and Ethiopia have populations of plus 150 million, I believe. I mean, what do you
yes.
see in those countries? I mean, you may not invest directly there, but I mean, these
In
are massive markets.
massive markets, enormous opportunity in terms of hospitality. That is absolutely correct. Relatively shallow supply, meaning that they can really take on more and more hotels going forward, which means that the opportunity in the RC, and when we see anything there in terms of pipeline, they tend to be quite profitable hotels because they have really that pricing power, they have the demand. So DRC definitely not the easiest country to operate in, right? So you probably in cases like that, probably best to have a partner as well. Ethiopia is completely different. We spent some time there. I'm an enormous fan of Ethiopia. Some of the things they've achieved, the power of that economy, and again, there's a big need for hotels, but there's a known difficulty that's been in Ethiopia over the years is as an international investor, the difficulty to really envision and imagine your ability to extract your capital out of it was always kind of challenging, and I know that trying all that they can to work around facilitating that, but that's really been the you look at this opportunity like this is such a no brainer, it's incredible, but then how do I inject capital in there, and how am I able to not necessarily just exit, but even taking dividends out it tends to be a bit of a challenge. But I know the IFC recently announced, I think, a deal there as well. So it's a great opportunity, and I think again, sometimes you just need a specialist investor who will solve it. Maybe it'll be a local investor that would go and invest more. The DFIs might support it. But yeah, these markets have a lot of years to be bullish for, I think, on a going forward basis, these two specific markets.
Does this come down to having more conversations across Africa and globally about Africa in terms of best practices? Um, you know, having conversations between the private and public sector about.
Absolutely.
I mean, is that increasing? I mean, how are the also how obviously Accor is you've worked with Accor a lot.
Yeah.
Obviously, it has a francophone. Um, France, West Africa kind of connections. I mean, what do you and you may see the other international brands, the Radissons, the Marriotts. So they do have properties, and quite a number of them probably in key markets. But what conversations about best practices and also international comfort are in terms of what you're talking about the capital and extracting the capital and also the operational day-to-day stuff. I mean, are we seeing more conversations happening?
Yes, definitely. I think there's definitely more conversation. There's a lot of these, there's also the Africa Hospitality Hotel Conference that takes place every year where you see a lot of exchanges. We interact quite a lot with different governments, in a very more of a, this is what we do, this is what we bring to the country. We want to understand their tourism strategy. That's be very productive conversations, very, very productive conversations. And then we also interact with other players in the market. And when we say we interact, we exchange notes and and we work on really kind of sharing notes on best practices, risk management, and also in some cases partnering with each other. And I think that is starting to kind of garnering itself and building. We're not competitors per se. We are all in this in a market that requires a lot of capital and that needs a lot of expertise. And I think people interact. We interact like that with each other, and in the industry we kind of know we kind of know each other, and we participate in with government intervention and etc. So I think I'm quite positive in it since the beginning when we started this venture. I can see a difference already. And hopefully that will keep driving industry growth, and maybe provide government can also facilitate some of the synergies or some of the initiatives private investors like us have, and that's going to be ideal.
And lastly, David, let's talk about the next 5 years for Casada and also Africa. Optimism, I can hear that from you. What's the timeline for you and Africa in the next 5 years in terms of the hotel industry and, and tourism in general?
Yeah, so I think continued growth. I think I'm a big believer that because we tend to talk a lot about business hotels, but I think the leisure part of Africa is also something that's going to be very interesting. The growth of the likes of the Zanzibars, and speaking of football, Cape Verde is a really interesting hospitality destination with a lot of big box resorts that are being very, very successful. The growth, and after this World Cup, I'm sure more people will visit. So we're also quite bullish on leisure, Africa leisure. The world's getting all this tech and this technology, and you still have places in Africa that go and are so untouched, and that's going to become more and more valuable. So I think that we're quite keen on. In terms of Casada, it's just continued growth around you know some of the learnings, because we've done something unusual in terms of scale and positioning in Africa. You learning some of that, refining our strategy even more, be even more targeted, whether in countries, North Africa. I think Morocco and Egypt offer scale and massive market. We're really interested in those. And then using some of our learnings to also optimize operations, right? So some of these things in Africa that we're talking about around the cost, the advance of AI can really enable us to kind of leapfrog certain things within the hospitality sector, and we want to be a bit forward thinkers in terms of that. So I think it's really about that now. It's execution and optimization around the operational, and kind of build a moat around that expertise. Yeah,
And with the rise of leisure travel, it doesn't seem to be stopping. There'll be more
yeah,
international visitors coming to what is a wondrous continent and wondrous
exactly,
countries within that. And you'll be on more planes and in more hotels, no doubt, in the next few
exactly.
years. David Damiba, managing partner. co-CEO of Kasada Capital Management. Thank you so much for your time. This has been fascinating. Thank you for listening, listeners in CoStar News Hotels. Keep following our pages. We're there every day covering the hotel industry wherever you are. And again, David, everybody else, thank you so much for your time. Have a great day.
Hello, I'm Luke Haynes, People Newsletter Editor CoStar News, and the host of Top Credentials, a monthly podcast exploring the colourful careers of those working at the top of UK commercial real estate. In the episodes, we discover the valuable lessons influencing the daily decision-making of property sector leaders, and hear about the aspects of their job that make it a little easier to get out of bed each morning. We'll also ask for their views on the latest news and policies shaping our constantly evolving industry, and even get them to share a famous quote or song title they think defines their career or the profession. Listen on Apple Podcasts, Spotify, or wherever you get your podcasts.
This episode of The Upgrade was recorded on July 8th, 2026, and edited by Sean McCracken. Head to costar.com/hotel news for more coverage of the global hotel industry, and find all of CoStar News Hotels podcasts on Apple, Spotify, YouTube, or wherever you listen.